Welcome, ladies and gentlemen. It's Zurich Invest time here, the event at the Dollar Grand Hotel, and with me here is now Royal Gold. You hear the name already, a royalty gold company, and Stefan Wenger, the CFO, wants to give us an insight into your terrific company. Welcome.
Well, thank you very much for having me, Jochen.
Yeah, thanks for taking the time. Royal Gold, I mean, the name implies already, what are you doing?
You know, we, as the name implies, we're in the gold business, but we're not into the mining side of the business. We're a royalty and streaming company. And the benefit that gives us is we own nearly 200 properties in which we hold a royalty or a streaming interest. 38 of those are producing today. And the business is a very high margin business. To run the business, we only have 21 employees in the company.
Well,
so it's
phenomenal.
a very scalable business, and we can generate very high margins, close to 80% out of the business.
Wow, sensational. And when you say over 200, let's call it royalty projects, are they only in, let's say, Canada, US, or are you worldwide?
You know, we're worldwide. Most of our interests are in North and South America and the Dominican Republic. We also have a growing investment in Ghana, in West Africa, and a royalty portfolio in Australia. The biggest countries for us are Canada, US, Mexico, Chile, and the Dominican Republic.
Fantastic. If you would to have to describe, let's say, your business model, how is a typical royalty structured when you are doing that?
You know, typically we structure a royalty or a stream. Most of our new investments are streams where we can put a large upfront investment into an operator, and the operator can use that investment to construct a mine or to enhance their balance sheet. And then what we take instead of equity or debt is we take an interest in the future production from the mine. So for instance, back in 2015, we put $1.4 billion to work into new projects, including an investment in Barrick's Pueblo Viejo project, the Andacollo mine operated by Teck, and also Rainy River and Golden Star Resources projects, respectively. So we're able to put that money to work. The operator gets the benefit of upfront capital to build or construct a mine. We get the benefit of life of mine percentage of production.
That's important. Life of mine. There's normally no time constraint.
No, and that's what really gives us a lot of optionality within our portfolio. So our current existing mines today the operators are always looking to enhance the value of their own project. And once we have our investment, they're going to put money into the project, and we're going to benefit from that over time. For instance, Gold Corp, we have a royalty at Peñasquito, and today they're currently putting $400 million into an expansion called their pyrite leach expansion. And we're going to benefit from that through our royalty over the life of the mine.
That sounds to me like a very compelling business, but I like that already.
It's a fun business.
Yeah, because you have a one-time investment, I would call it like that, and then you have to judge the risk factor of the company, if they can make it or not. But if they make it, you are fine.
Yeah.
You're benefiting all the time.
We're benefiting, and it's not without a lot of judgment of the risk. You know, we have, out of our 21 people, we have a team of technical experts, mining engineers, lawyers, and finance people who've all worked in the mining business. So we understand the risks of these investments, and we put a lot of time up front into evaluating which projects we want to be involved with.
Right.
So we're by investing in Royal Gold, you're taking some of the risk out of investing in one mine by spreading it out amongst our portfolio.
That sounds to me more like a fund. Honestly,
it's a very specific, technical-driven fund.
Yeah,
sure.
Absolutely.
And we're publicly traded on the Nasdaq.
Yeah, so that's fantastic.
Available to anyone.
Yeah, super. Let's come to some numbers, I would call it. I saw your last quarter, you got 58,000 ounces of gold. You received,
yes, and we just put out our ounces from our streaming. The streaming side of our business. We haven't yet put out the royalty ounces, which will be in addition to that. But 58,000 ounces of gold sold on the streaming side this last quarter ended March, which is a 10% increase over the December quarter. So we had some good growth in our sales this quarter. Yeah. And what you're really seeing is our new investments that we made in 2015 are fully coming into our revenue now. We had a great quarter from most of those operations that are now fully contributing. The only one that's not contributing yet is Rainy River, and we expect that at the end of this year, which will add additional growth.
Oh, wow. So for 2018, you are quite positive on that then?
Yeah, 2018, we're looking forward to having a full year from Rainy River, and we'll also start to see some other new projects come in, like Cortez Crossroads deposit, which we have a healthy royalty on, and also the continued growth of Golden Star with their Wassa and Prestea underground projects coming into full production.
Fantastic. Okay, let's come to some hard numbers. What is your guidance, let's say, for 2017? How many ounces you think you can get, or let's put it that way, where do you see the revenue and where do you see the profit?
You know, I'm going to disappoint you because I won't give you any guidance. We don't typically
tried
give
it at
guidance in
least.
the company, but it was a good try. But I can tell you that we're having a great year. We've grown at a 12% CAGR for the last 5 years in volume production. And as we look ahead, we have the new production coming in from Golden Star, from Rainy River, and from Cortez Crossroads in the next couple of years that I talked about. So we have a good growth profile ahead of us as well.
Fantastic. If you look at new investments, how do you finance them typically? Can you finance them, let's say, out of the royalty payments and the streams, meaning your cash flow? Or are you also going to the banks and say, okay, let's lend some money at 1, 2, 3% plus LIBOR, if you want to put it like that? How is it working?
Yeah, right now we have a great balance sheet. We are in a net debt position. So when we did the $1.4 billion of investments in 2015, we did all of that through our existing cash and cash flow plus $345 million drawn from our revolving credit facility. So today we've completed all of the commitments related to those investments, and today all of our cash flow is going to repay debt and really to refill our liquidity pool for the next investments. All that money is still available under their credit facility when we pay it down. We work with a syndicate of 5 banks who've provided great support to Royal Gold over the years, and we're able to borrow it at a rate of about 3% on incremental debt.
Well, that's fantastic rate, I would say. That's sensational.
It's not bad.
I mean, even if we look at the margins, that's phenomenal what you are getting out of that. And let's put it that way. Where do you see the future for Royal Gold? I mean, you have 200 projects. You have, you said, like 37 are already now.
38 are producing
38,
today.
sorry. Are already now, producing. Like, where do you see, like, in 2-3 years from here? Where do you want to be?
Sure. We're constantly, we have a great corporate development team that is constantly looking for new opportunities. So we believe we have capacity to invest in new projects. So today we're talking to potential counterparties and trying to come up with ideas that make a win-win for potential counterparties so that we can deploy new capital and use our cash that's coming in to grow the business. But during that time also, you're going to see some of the projects within our portfolio have some organic growth. For instance, we're watching Barrick. They're doing a pre-feasibility study on additional tailings capacity at Pueblo Viejo. And to give you an idea of what that means to us, if they're able to add additional tailings capacity, it could add around 7.7 million new ounces to reserves there.
Wow.
And that's going to be a substantial number for us. I mean, if you take the value of our interest on those reserves, it's over $400 million at today's price.
Fantastic.
So that's the kind of optionality within the portfolio that we're looking for. And of course, we've got operators all throughout the portfolio that are doing work to enhance their properties, which we hope will come to us as well.
Great. So we have now spoken about, let's say, how the company is doing. How are shareholders benefiting of that?
The shareholders are doing well. Our share price has been trading well, but there's still opportunity there. We're trading now. We've rebounded quite well over the last year. Our share price has outperformed, but we're still trading at a slight discount to some of our peers. So we think there's room on an NPV basis, NPV multiple basis for new shareholders to benefit from our growth.
And how about, let's say, share buybacks, dividends, and stuff like that?
We've been a dividend payer for over 16 years, and we've increased our dividend each of the last 16 years. So today we're paying a 96 cents per share dividend, which we believe is one of the highest in the mining industry on a nominal basis. So we continue to have a policy of growing and sustaining that dividend, and we're going to do that into the future.
Super. That was a great final statement. Thank you very much for that, because that's what I like to hear, taking care of the shareholders also. And I'm a big fan of dividends, honestly. That's why I was asking. I saw it already, but
well, thanks for the question.
Good for our viewers. Thank you very much on that. And look forward to hear then that you bring many more projects, let's say, in production, meaning benefiting for the sake of your company.
Okay, well, thanks for the time.
Thank you. Ladies and gentlemen, it was Stefan Wenger, the CFO of Royal Gold, and you heard it, a very, very successful gold royalty company. And they are doing a lot of new projects, a lot of big investments, 200 projects already they have in their portfolio. 38 are already, I would say, cashing into the company, and they are paying since 16 years a dividend with 96 cents, the last one, which is one of the highest, as he said, on a nominal basis. We really like that, of course. So I would say check out the company. Thanks for watching us, and bye-bye from Zurich.